Okay, welcome. If you're new to the channel, we cover stock charts, technical analysis, and I call it like I see it. So we're going to get right into the charts, show you guys what's going on today. This morning it really played out exactly like I thought it was going to last week when I said that I think we'll probably, gap down. That's a high probability. And that's what we got so far. Let's see if this sticks throughout the day. That will be very telling. If the sell-off sticks and they're not able to buy it back, then ultimately the dip buyers failed and expect lower prices. I want to point out volatility here, UVXY. We're starting to get that pop that I was talking about. Oftentimes when I think a trade is setting up or is going to be available to take advantage of in the future, I start talking about it in my videos. And oftentimes, I don't. Usually when I'm talking about a trade, the move hasn't happened yet. So I don't like to take trades and point it out and say, hey, look, this thing's gone up 300%, could go up another 50%. I don't know. What I look for is trades that haven't happened yet, and to try to lay the foundation for, if this trade's going to work out, look for these signs. And we're starting to get those signs today here in volatility. So as I said, start to look for volatility to expand. This UVXY is up 12.5% as of today, and this is just the beginning of the move if the selling continues and they don't buy it up and hold. If the dip buyers can't buy it up today, so look for UVX to continue. I've got areas 46. There's profit areas 46, 70. I don't expect volatility to explode higher like it did there in March. That caught a lot of people off sides. I think this move is more of a greed-based move. And yes, there are a lot of people who have been on the other side, the long side, buying calls, and that has to unwind itself. But it was easy to see that one kind of coming, at least from my perspective. When you get so offsides on the kind of the long side, you can see that there's going to be an unwinding, and that's what I think we're seeing right now. So it's kind of more expected. So I don't expect this move to be as big, but we could get up to 46 potentially. Here's triple Qs. You can see here on the hourly. So far we gap down, which is impulsive. That's good. I guess when you're looking for downside moves, you want to see the money get trapped in. And so as you can see what they did today, or here's Friday right here. They rallied it back up towards the close on Friday, kind of keeping everyone guessing and keeping people in their trade, basically, not allowing you to get out. Or maybe you didn't want to get out because you thought, oh, okay, we did rally into the close and we're right below resistance. But what I saw is we basically rallied at the end of the day on Friday. Again, I talk about that all the time. If you moves at the end of a day on a Friday are oftentimes just a fake out, low volume move. Market makers are playing games, and they're not usually the market consensus. So a move that you see more on a Monday during regular session hours, and that's why I'm looking to see if this sell-off can stick, because a lot of the sell-off came in the futures market. So if the sell-off can stick throughout the day, that's going to give you more of a market consensus move of where the big money is positioning. And so it gapped down, trapping that money that didn't get out on Friday. And so I suspect the selling continues. And here's what we got on the daily chart here. This uptrend line, this red line right here, that's the upper end of your bullish price channel. So we're coming down into that. I think we're going to probably hit that today. Maybe we'll hold that, get some sort of a reaction, a bounce, and then probably work our way lower down to, I think we're probably going down to this 254 level. If I go to the hourly here, you can see we had some reactions right in here around 254, and then these little candles spiked down to about the 252, 251.70 or so. So somewhere right in there, I think, is where we're heading in the near term for this move, and then maybe we'll get a bounce. And what the bounce will be is probably going to be a bounce back up to the upper end of the price channel, right up here. And so from there, let's just say we bounce from there up to here, a 2% bounce, and then we work our way lower over time. The longer term target, or the intermediate term target, I guess, is probably the lower end of this price channel. Depending on when we get there, it might even fall in line. I was looking, there's this gap right here that we had back. We might fall in line, and we might work our way down and come down and tag it about the same time, maybe in the November area at 223. So that's a possibility, not a guarantee, but a possibility. If we break down into the price channel, it makes it a much higher probability that we'll continue down to the lower end. SPY is, in general, SPY is just looking a lot more bearish from my perspective. And here's what we got on the SPY. If you go to the weekly, the green line, I've pointed it out for years, is major. That's your bull market in the S&P 500, and that was broken. This is 2009. That trend was broken in 2018. So years ago, that trend was actually broken. That's when I started my channel, and that's when I really started talking about how I think that we're starting a bear market. Now, the bear market, it wasn't just a complete crash when we broke the trend line. We've put in this big, long megaphone topping pattern, but you can see what's going on here. In 2020, before I knew about the pandemic, I was saying I think this is the top of the market, and that's because we were trading right here. We had back tested. And then we, obviously the pandemic news came out. This thing plunged. But that was a pretty impulsive plunge. The Fed stepped in, pumped it all the way back up. So both of these pumps, 2019 and 2020, have all been Fed-induced. It's basically the Fed coming out and cutting rates, pumping the market with stimulus. They did it here in 2019, right here at the bottom. 2018 is when they stepped in, and they did it again right there. Both of these moves are based on that, not based on necessarily fundamentals. So then 2020, we did another back test. We're starting to roll over. The market needs stimulus if it's going to keep up. And what they've got with, I don't want to get too much into the fundamentals, but there's the news out of the judge that just passed away, I think, is setting it up for no stimulus to be passed, because they're going to all focus on that, because that's a pretty big political issue. And politicians will pick political issues. So we could easily do kickback rallies. We could continue to do that in the S&P. But the point that I'm making, the bigger point I think I'm trying to make, and the reason why this channel, I've continued to really look for short opportunities over longs. Although, there's been some long opportunities. I continue to look for kind of the tops or the shorting opportunities, is because we broke the trend back in 2018. So the trend's been broken, and so everything that I've viewed as a rally has been just a kickback rally to major resistance. And the trend, I'm looking for the trend to actually start to create a downtrend. And that's completely possible. All right, so here's gold. We've talked about this. I've talked about this, feels like, for weeks or month, or I don't know how long, but every day I've been talking about gold because I think it's important. And what I've been saying is I think we're going to break down to the 1790 area. Here's the triangle that we've been making, and I kept reiterating that it could break either way, but I put a higher probability that we break down. There's your breakdown. That they're probably not going to recover this today. That's pretty impulsive. It looks like it's continuing to the downside. So I think this consolidation period that we had is now proving that it's going to break to the downside. 1790 is the area I'm looking at. So maybe we get there today. Probably not today. That's a really big move, but maybe this week sometime. Or sell off a few days, have a little bit of a bounce, and then continue down. But 1790 is the area I'm looking at, and it's starting to make that move. Here's the dollar kind of breaking out. Not not impulsive yet, but I mean, you can see today, all buying today in the dollar, so they're rushing to the dollar. Hasn't broken above this kind of recent flat range right here, but I suspect it will. So dollar, I got around 95. We could even break above it, but I think anything above it probably will get sold into. But 95 area, 95.40, depending on when we get there, that is the area I'm looking for on the dollar. Here's a short that I have, PAAS, starting to break down. You can see here we just put in this kind of consolidation period for a while gold was trying to figure out which way it wanted to go. But now I think we're getting the resolution. So impulsive breakdown below support. And I think we're heading down to 30.50. We've got a gap right here. And if we break below that, which I think we will, probably head down to this 26 area. So those are the areas that I'm looking for on this one. And just gold in general gold miners in general are going to sell off. Again, watch that 1790 on gold bullion, see what happens there, because that could be the end of the down move in miners, or somewhere around there. XLV breaking down. Again, this is early in the morning. The day's still young, but we have, we haven't had the dip buyers step in yet. So if they're not going to step in this morning, maybe they will this afternoon, but to me it looks like this one's going to stick. It's been set up and it's been kind of forecasted. I've been anticipating this breakdown, and we're now getting it. So I think it'll probably stick, but we'll have to wait and see how the day closes. So again, take the information that you're seeing right now, incorporate it into the price action that you see today, and then you can do what you want with it. But XLV is breaking down from this flag that we had. So here's your flag right there, your flagpole. There's your flag that we created. You get the breakdown, and that sets you up for a measure target down to about 101. So I think we'll probably get there today. Maybe get a little bit of consolidation and work our way down to 97. XLF. This one looks like a wheelbarrow and dumpster. Wheelbarrow and shovel stock chart. I mean, this thing's a dumpster fire now. And so here's what we got daily. Here's your uptrend line for all of 2020 in financials. We broke that right here. Here's your breakdown. So financials have been weak. They've just been hanging in there, but they've been below trend. And you can see that on this daily chart, we broke, back tested several times. Then we started to drift sideways. And what I told everyone, I believe, on Friday last week, I said this thing's starting to drift sideways. And I've seen this before. And usually the way this works out is you get a gap down. Go back and watch the video. You'll see me talk about that. But it's just because I've seen it before. When you drift sideways, usually you get the move comes in a gap down. And sure enough, there it is. So that sets us up for continuation to the downside. Probably going to head down to, let's see here. I'll have to kind of tighten it up a little bit. We do have a little bit of a gap right here that has not been filled. So that's a pretty obvious target right around 22. All right, XOK. If anybody thinks the bullish trend is still intact, we're getting further proof today that it's not. And here you go. Here's your uptrend line in XLK for 2020. We broke, kind of did some back testing action, and now we're continuing to the downside. So to me, this looks like a perfect clean bear, kind of a bear flag, and you've got just kind of, and this isn't exact. This is just kind of rough, but I'm just trying to iterate the point of where I think we're heading. So there you go, somewhere right around there. Probably around this 101.50. Now that's rough, but I'm just trying to point out I think we're heading lower. Okay, and Tesla's just breaking now. I was watching it this morning and it was up, and that was interesting. I was kind of curious why Tesla was up, but then I realized that Nikola company had their CEO or founder resign. So it's kind of a competition thing. It's like the buyers are like, oh, Tesla's competition's out of the market. Nikola was never competition for Tesla. They don't even have a working prototype. They're not selling vehicles. It's just all, that was all just speculative. So yeah, I mean, they were competing for some of the speculative dollars, but there was no real competition there. And you know, so there was no real reason for Tesla to be up. I mean, Tesla should sell off with the rest of the market. It's an unwinding of the bullish trade, the kind of the overextension of bullishness that we had, and that's what I think that's really what the trade is an unwinding of that. So it has nothing to do with the fact that Tesla's competitor or any of that. It just has to do with Tesla was part of that, bullish bullish bubble or whatever, and we're going to see unwinding of that, I believe. So we should see unwinding of Tesla as well. Here's the breakdown of the trend line that we've had in place, kind of this minor trend line breaking down, and we've got this one down here is not my favorite trend line, but it's the best one I can make. We've got two reactions here, a reaction here, and then if you can see it's right about there. We've got a couple more reactions. So perhaps we head down. We're probably going to get there today, but we head down to this 384, and then we'll see. We do have some gaps, though, and I think that this is where Tesla's actually going when we see the real unwinding of this trade. I think we're heading down to this purple area as kind of the first target, and then a potential trade all the way down to this area right here at 130. That's a potential. But I think this purple area is a higher probability that we're going there over the next weeks, months, I don't know when, but I just think that that's where we're heading. Adobe's still holding its support line. You can see it's got this support right here. So, the ones that don't break, if the market's weak and it closes weak, let's say Q's closes weak and the SPY closes weak, there's going to be stocks that haven't broke. If those stocks are growth stocks that were part of this, this bullish explosion higher, especially the tech stocks, like what you saw right here, then I would expect most of these to break with a gap down. So if they don't break during the day, they should break tomorrow or the next day with a gap down. Nvidia, this broke. Here you can see, and the line here that I have is just the bull flag, or bear flag, but we broke support right here, heading lower. So we got a gap right here. So I think we're going to go fill that gap probably today, and that will be a gap of 463.50, we'll call it, but right in that area. So I think we're heading down there, and from where we're at, that is a drop of about 3% more. Philip Morris. Now this is a potential bullish trade. Philip Morris is not a tech stock; it's a value stock, and they make cigarettes. And if you look here at the daily chart, if I can pull that up, you've got this downward bear channel that you can see in the red. I've marked it out. We've got a couple gaps I've marked out, but this downward bear channel that we've been in. We broke to the upside right here, but it was a false breakout bull trap, and that proved to be a bit swift washout right there. Well, we broke above it again, so now we're trading above it. We're coming back in for a back test. So a back test could be an objective area. I don't think we're going to get another bull trap. It could be, but this could also just be a back test. So I'd prefer to take it as the back test, and then just play it by ear, because this thing could just trade sideways or could go up, even though there's everything else is being sold. So it's being sold today, so maybe this hat wants to come down to the 75 area. We'll watch this around that level. And Zoom's still in a bubble, looks like. Zoom, obviously, they have a product that's useful right now, and that it's being used widely. So this thing might not sell off till there's some sort of a vaccine news or something. I don't know. I'm not shorting this one. I don't see anything right now that tells me it's there's no sell signal that says it's a short. I would look for a breakdown of this rising wedge for kind of that sell signal. Here's the trend line. So if we break that impulsively, that might be your sell signal or an objective area. Until then, it's just, showing relative strength. Not interested in shorting something that's up almost 4% when the market's rolling over. Semiconductors, SOXX, they're selling off today. They haven't broken support yet, so they're sitting right on it right about now. 286.75. A breakdown there. We should head lower. Corn today, I had shown this as a bullish one, but it's selling off. If it holds this right here, then it might continue higher, and it could easily do that. I've got targets up here around $14 in corn, but if it can't hold and it actually breaks and closes lower, then that's going to show weakness, and we're probably going to come down for a back test down around this 12.50 area. And this is playing out because the dollar's getting stronger due to the sell-off in the equity markets, and strong dollar is bad for commodities. Pulte Hums just starting to break trend right now. This is the best trend line I can make on it on this hourly chart. This is going back to the March chaos, and you can see we had a reaction right in there, reaction here, reaction there, reaction there, reaction right in here, and a breakdown. And the breaks comes in the form of a gap down, so that looks good. I think we start to sell off. Probably gonna fill this gap. That's a really obvious target right there at about 39.50. From where we're at right here, that is a drop of about 8%. So that's a pretty obvious target, and I think that's where we're heading. Okay, I'm gonna wrap the video up, get it out, let everyone let me know what you guys think. If you guys are finding value in these videos, leave me a thumbs up, leave me a comment if there's something you want to talk about, and I'll catch you guys on the next one.